What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, AMD, Tesla, NVDA, Meta, and Netflix. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly what critical levels to watch for reversals, profit taking, and breakouts. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that SPY, for the first time since March of 2023, SPY closes below the 200-day moving average, which is the last and final moving average that Wall Street and institutional traders use as support and resistance. So of course, we have the 10, 20, 50, 100, and 200-day moving averages. Every time we broke below one of those levels this year, we have sold off for the months to follow. Now we are below the 200-day moving average, which is the most significant support that we can have in terms of a moving average, which means that bears could be taking full control of the market here, and we may see a further downside move in the coming weeks or the coming months, and we'll talk about that in just a little bit. But before we jump into the technicals, let's talk about some things that happened last week and some things that are happening this week that could potentially send us further up or further down. First of all, September retail sales reflected a 0.7 increase last month versus the 0.3 expectations. So of course, retail sales have been positive since April, and while this is good news for the economy, some traders and some investors may not see it as good news because stronger spending from consumers can result in higher inflation. And of course, the Federal Reserve's whole plan right now is to control spending. That way they lower inflation. So if spending continues to be strong, it's likely that inflation will linger on. Now, speaking of inflation, this week we have the PCE report, or the Personal Consumption Expenditures Price Index, and this is the Federal Reserve's preferred gauge of inflation. Month over month, this has been coming down slowly, but we are still far away from our 2% goal. The Federal Reserve is trying to bring inflation back below 2%, and they will continue holding rates at this high until they bring inflation down to 2%. So as long as the PCE report is not reflecting a number close to 2%, it is not seen as a good sign. That will be coming out on Friday. We will be making a few videos between now and then, so make sure you check back in for updated levels and projections. Also last week, we saw earnings from Tesla and Netflix, which had very opposite reactions of one another. Tesla lost 30 billion or 15% in market cap, while Netflix gained 20% in market cap. Tesla missed earnings, and they cited different things like higher interest rates, price cuts on certain models, and growing competition in the EV industry. And their miss on earnings actually sent EV companies across the board lower. In fact, the whole market ended last week lower. Netflix, on the other hand, was one of the only stocks that actually held its breakout, and it managed to end the week fairly strong compared to the rest of the market. So now let's jump into the technicals and talk about some levels to watch going into the rest of the week. First of all, let's talk about SPY, which is the biggest thing to watch. Of course, where SPY goes, the market tends to follow because the market and SPY are a product of one another. So SPY is right back to where it was just a couple weeks ago to start October, and it's retesting that 420 mark, this time closing below that 200-day moving average. So the first thing you should do every time you open up your charts this week is look at the 200-day moving average, look at the daily candles, and see where SPY opened up in relation to it. If it opened above, that means buyers are trying to take control again. If it opened below, it is likely that sellers will stay in control. Now, of course, Friday's volume and Thursday's volume was some of the strongest volume we've seen all month. In fact, it is the strongest volume we've seen all month, and they were both strongly red candles. Now, this week we have earnings from companies like Microsoft, from Meta, from Google, and Amazon. And so if those companies do not come in line and they miss earnings, it is very much likely that SPY will continue that downside trend, and we will be talking about updated levels in the coming videos, so make sure you check back in for those updates. Now, moving on to our watch list, first of all on our watch list is going to be Apple. Apple has not reported earnings yet, and it's not reporting earnings for a few more weeks. However, we are seeing that it is developing a very similar pattern that SPY is developing. You can see that SPY has been making lower highs and lower lows, and eventually it's coming right back down to this low to retest and potentially break. Apple is creating that similar pattern, so it is likely going to continue coming down to this level here. Let's talk about some levels for Apple. Apple's levels here are going to be, first of all, the resistance is 182.35. So if you are bullish and you want some kind of regain, or you want bulls to take control again, you need Apple to move at least above this 182.35 mark. But ultimately speaking, buyers are not going to take full control until Apple is back above 190, which was the strongest rejection it saw between September and October. Now to the downside, the next support we're watching is going to be 172 to start off the week. But ultimately, if Apple cannot hold the 162 or the 167.62, then it will fall towards that 162 mark. Now, if you are short or bearish on Apple, you can potentially take puts anywhere below that 177.85 and set a stop loss above that point, or you can wait for the break and then you can use a stop loss above this point. If you are bullish, as mentioned before, you need a breakout above at least 182.35 to get into calls. But swinging calls in this environment is going to be very, very risky, so make sure you keep that in mind. Anything you swing, make sure you're giving yourself plenty of time, and I would suggest smaller positions while earnings season is going on, because earnings can really send markets up or down overnight. Now, before we jump into the rest of our watch list, let's just talk about SPY's key levels on a shorter term chart. Here we're looking at the hourly candles. Apart from the 200-day moving average, of course, the one that we already talked about, here are some key levels on the hourly chart to watch. First of all, SPY's most critical support going into this week is going to be 418.80. Now, where did we get this number? If we look back, we can see that SPY's reversal that came in the beginning of October that sent us back to 438 came in at 418.80, and this was a pre-market move on October 4th. Which means that that is going to be the most critical support to hold. Obviously, sellers here were not willing to sell it any further, and buyers stepped in. And so if the buyers are no longer to hold it at 418.80, then SPY can fall quickly to retest the 416.20 mark. And below that level, there is not much support till 410. So remember, earnings this week are going to be critical, and they're the ones that can send us even further than 416 or lower than 416. To the top side, SPY has multiple resistances before it can reach any type of bullish area. The most bullish area it can reach is going to be above 438.60. This is a pretty aggressive price target, so it is unlikely to reach it this week. Again, we will be uploading multiple videos this week to update you guys on these levels, so make sure you check back in. Now, the next stock on our watches is going to be AMD. AMD tried its best to move up in the last few weeks. However, the overall market conditions did not allow this. Plus, a lot of reports out of China and between the US and China. The US is putting some restrictions on AI chips going to China, which has hurt the semiconductor industry as a whole, which is why AMD and NVDA suffered a ton in the last couple weeks. Now, here are some AMD levels to watch. First of all, AMD needs to get back above 112 for buyers to take control. You can see here that it triple top just below 112. If you're not familiar with a triple top pattern, it just basically means that the stock got rejected at the same level 3 times, which means that 3 times buyers said that they're not willing to pay more than this price for the stock, which makes that a very strong resistance. So if AMD can move its way back above 112, that means buyers are retaking control and they're finally willing to pay more than 112. At that point, it has a price target of around 119 to 120. But given the overall market conditions, it is likely going to see more downside. If AMD cannot hold the 99 support, then it moves back to very bearish territory and it can free fall towards the 93 support, which would be our downside price target if we were to take puts. We have been playing both calls and puts with our team, and we have been successful on both sides, which is another great tip for the weeks ahead. Don't get too attached to one side. The market is moving both up and down, and you can take advantage of both those moves. If you want to learn more, make sure you check out the link in our bio. And below 93, the downside price target would be 89. Again, these are aggressive price targets, so make sure you check back into our next videos so we can update you guys on those levels. The next stock on our watch is going to be Tesla, which obviously suffered a ton this week. Tesla lost more than 15% in market share after their earnings, and that's because they missed on earnings, both revenue and earnings per share. Tesla's margins or profit margins were thinning since their last earnings, so investors really didn't want to see them thin even further, which is why it got sent down so severely. Now here are some critical levels to watch, and before we get into them for Tesla, let's talk about it on the daily candles, where we can see that Tesla, like SPY, is now trading below the 200-day moving average, which is the final and last moving average support that it has, and it is also the strongest one. So as long as Tesla is below that 200-day moving average, buyers can be in trouble. So let's talk about some hourly levels on Tesla here. First of all, we have the 210 support to start off the week. That is going to be the most critical support to watch. If it breaks below that level, then the next support is going to be right around 199.30, and below 199.30, Tesla would be below the $200 psychological support, and at that point it can free fall even further towards 191 and even 178. Now, Tesla did make a very sharp downside move in the last week, which means that it is unlikely to make another sharp downside move this week. So we are seeing some consolidation developing. So if you are taking puts or shorting the stock for these downside price targets, make sure you're giving yourself a few weeks to a few months on any position you take. Now to the top side, Tesla will need to move back above the 231.65 in order for buyers to take any kind of control. But even then, buyers are not going to be in control until Tesla is back above this level right here, which is the ultimate rejection. So remember, from the SPY chart, from the Apple chart that we already talked about, it seems like a lot of stocks, a lot of major companies on the market are making this lower high and lower low pattern. And this pattern is typically called a bearish head and shoulders, and it can result in a very strong downside move. Now, the way to break back away from this pattern is for the stock to break above the last level that it made here, which means that Tesla will need to be back above 270 in order for buyers to take any kind of control. But if you're looking at the very short-term charts, it's very possible for buyers to start taking control above 231.65, but ultimately they won't get comfortable until they're back above this level, because then it will start reversing back into making higher lows and higher highs. The next stock on our watches is going to be NVDA, which, like SPY, is below the 100-day moving average, but it is one of the only stocks that's still holding its 200-day MA, and that could be part of the reason that NVIDIA hasn't sold off as severely as the rest. But nonetheless, if you are looking at NVIDIA every day on the daily chart, what you're focused on is going to be a move back above these lines right here. NVIDIA needs to regain the 100-day moving average in order for it to regain any kind of control. Here are some shorter-term charts or shorter-term levels on NVIDIA. First of all, NVIDIA's support is going to be 396.50. Below that point, the stock can see a sharp downside move towards 373 to 374. If you are bullish on the stock, it can regain some kind of bullish control above 433, and your bullish price target is going to be as follows at 447, 462, and 476. Now, these are very aggressive price targets to the top side, so if NVIDIA does rally towards 476, it likely means that the entire market is rallying with it. It is very unlikely for one stock to be such a standout stock unless there are some earnings that are moving it or something specific to that stock that is moving it. But even if there was something specific, if that catalyst is not strong enough and the entire market is moving down, the stock will likely follow the market down. The next stock on our watches is going to be Meta. Meta is, just like NVIDIA, one of the strongest stocks on the market right now. However, it is starting to show a little bit of weakness as the market sold off last week. Now, here's some key levels to watch on Meta, and don't forget that Meta is reporting earnings this week. Meta's earnings are going to make or break the stock. It has been lingering around these levels for quite some time, and the fact that it hasn't seen a major move means that earnings will likely bring that major move. Now, Meta's previous earnings resulted in very strong results. You can see that there was a gap up and push. Again, on this earnings, gap up and push. And again, on these earnings, gap up, pull back, and then push once again. So Meta has been impressive on their earnings. They have been growing. So traders, of course, want to see that trend continue. Here are some key levels to watch on Meta. First of all, if you are bullish, you need Meta back above the 315.85 level in order for it to break out towards its price targets. But nonetheless, right now Meta is not doing too bad. It is still holding above key moving averages. It is not below the 100 or the 200-day moving averages. So far it's doing pretty well for itself. However, if Meta continues going down and it breaks below the 298 level, that is a very critical support. At that point, then we would take a short or a put position on the stock and take it down towards the price target of around 286 to 287. Again, we will be updating these price targets, so make sure you check back in. Last but not least, Netflix, which we usually do not cover, but we are covering it this week because of their stellar earnings and their stellar earnings reaction. Now, here are a few things we want to point out. First of all, we've already talked about this pattern on SPY, Apple, and multiple other stocks now, where it seems like the market and major companies are making lower highs and lower lows. Now, although Netflix had a spectacular earnings reaction, notice it wasn't enough to create a new high. So buyers wanted to see Netflix move above this level for them to take full control again. However, even on the strong earnings reaction, it is still technically making a lower high. So that is something to pay attention to. However, we are very impressed by the fact that they made this power earnings move. Anytime a stock gaps up as strongly as this and it holds that gap up, that is a very important stock to watch because it can give you strong bullish plays or strong bullish activity in the coming weeks and the coming months. So for Netflix, what we're watching for is for the stock to maintain these highs. Even if it consolidates here for a few weeks, it is completely fine as long as it doesn't fill that gap back down. We saw this example with Meta where they reported earnings and you can see that they pushed up and they maintained that gap only to push even higher, and they did it here once again, both of those on earnings. So for Netflix, we're watching for it to hold these levels in order for us to potentially take a bullish continuation play from it. Here are some levels that we're watching on Netflix in particular. Of course, the gap up moved to a high of 410.65. So the highest point that Netflix made this week after earnings is going to be 410.65 before getting rejected, which means that is going to be the resistance to pay attention to. So if you are bullish and you want to take a bullish play above 410.65, it is possible to enter a call or a long position, and then you'd want to place a stop loss just below that level. And then your price targets would be 421, and a second price target is going to be around 434. Again, these are aggressive price targets, so we will be updating in the weeks to come. Now, of course, to the downside, the ultimate support is going to be right around 386.90. If Netflix breaks below that level, then we are expecting it to begin filling that gap back down, and it can be very risky to hold a bullish position if it breaks below that level. So anyways, you guys, I hope you guys found this video helpful. We will be updating a lot of these levels in the coming days, so make sure you're checking back in. Best of luck, and remember, it is earnings week, so make sure you're positioning properly.